Thanks for tuning in. You're watching Markets Tomorrow.
Hi everyone, and of course let's start off by telling you the three experts that will be joining in today on the show. Well, Kumar Karwa, Managing Director and CFO at MK Global Financial Services, will be with us. On the charts is Sandeep Wagle, Founder and Managing Director at Apta Technical Advisory Services, and also joining in is Neeraj Diwan, Director at Quantum Security. Neeraj, to start off with you, do you concur with that sentiment that as long as we have the liquidity flows, that the move will sustain, but one has to move with a little bit of trepidation?
Now, good evening. Yes, I think Nikun said it all. Basically, though we like to be positive in this market, the flow is towards the positive side and you like to trade on the positive side. But then, you have to be very careful, because whenever we reach these kind of levels of 6150, 6200, we've hit a barrier. So this time there's slight difference that we did go to high levels, came back, did some base building, then we slowly inched up. So that kind of movement is slightly different than what was earlier whenever we reached 6200 levels. But even now at these levels, if you see, if someone was invested in a diversified portfolio in April, May kind of a time this year, they would still be down 10-20% even after reaching that level again. So though certain stocks, if you're not invested in IT as a sector really largely, then you not really made too much money even after reaching 6200. So there is definitely upside potential in stock, but then you don't know what can hit you at these levels. They can be selling which has come across around these levels where people have become cautious again. And second, again, they can be QE tapering talk with the data coming out of US again, which was delayed for some time. Even that can also be a little sentiment spoiler for the market. So you have to be careful at these levels, because these levels have been very important at previous times also.
Sandeep Wagle, even though the bears, they keep on reminding us that 6150, 6200, that's it, there is no life for markets beyond that. But do you think this time around it could be different? This market has rediscovered momentum, cyclicals are leading the rally, and we are moving from strength to strength.
Nikunj, absolutely. I would want to ask a question. Are there any bears left? I think the bulls have taken them out fully. And technically, I would want to make a point, because most of the things I think you covered in your opening statement, and I fully agree with you on that. We saw a very clear breakout on Friday, and today for a technical analyst, we look out for a confirmation, the price staying above the close of Friday or above that 6150 crucial mark, and that has happened today. Today's low is also much above that. I think 6163 was a tick, and then it has been trading nearer 6200. So in that sense, a confirmation has come. So very clearly with the breakout, now the follow-up move is likely to come. Doesn't mean that we cannot fall 50, 70, 80 points. That is always likely to happen any point of time on the news or anything like that. But I think 60, 50, 61 and 6350, which can extend to 64, is the range. And I think now we must be looking out for a new top, whether it happens before Diwali or whether it happens before to end of the year. I think end of the year is more likely. I would not like to put a pressure of time and that it will happen in the next 5 days, 10 days. But new top is very much in the offing.
Okay, and the bulls are certainly dominating. So, KK, what's your view? The market mood is positive, 6200, currencies eased off. There's a good amount of liquidity also flowing in.
Yeah, market seems to be gung-ho, and 6200 is a very important psychological level. But yes, FII flows have been positive, and even the result season so far, numbers have been broadly along expected lines. So expectations are building up that hopefully this time around we'll be able to decisively move beyond 6200, and hopefully the rally will become more broad-based. That's the need of the hour, because so far we have not seen any great participation from the mid-cap segment, and that's where a majority of Indian investors are invested in. So the expectations are building up that hopefully the risk appetite will move to the large mid-caps.
Whereas L&T occupied all the center stage for the better part of the day, if you have to nail it down to one stock, I would say it's Asian Paints. They came out with stellar set of numbers for the quarter gone by. Markets were expecting virtually no volume growth, but they have reported a double-digit volume growth for the quarter gone by. Margins also in a tough environment when the currency was not supportive and the industrial vertical was under pressure, they have expanded. Neeraj, what is your take on Asian Paints? Expensive stock, but the company is still delivering.
Yeah, I think the number that we saw today, increase in margins, volume growth, in a quarter where people say that going to be under pressure because of monsoons, still they delivered excellent results. I think rather than selling, I think it's become more like a buy on dips kind of a stock now, because all of a sudden where we're looking at 40 plus multiple is coming to low 30 multiple. If you see this kind of performance getting repeated in a strong quarter coming ahead of them. So I think I will rather move like a buy on dips kind of a stock for Asian Paints.
Okay, and the big question also of the day remains that given that FIs have shown quite a bit of interest in the equity markets, the month of October has seen inflows of close to 9,000 crores. The question is, what exactly is driving this liquidity? And Neeraj, if you could pinpoint what you think that could be.
I think it can be, liquidity pressure, the gush of liquidity that we've seen can be a pre-election buying also. I think if you're going to have the state election coming in and you saw a decent set of results to start our results season where people were getting very cautious, and definitely the US problem which was looming, that also got over last week. So there were multiple factors which would have contributed to the liquidity coming into our markets. I think we are getting our share of the emerging market money that is coming in, and with election coming in, with the results coming in the state election, you can get a clearer visibility of what can lie ahead in the national elections also. So maybe this can continue, this momentum can continue till you get the results of the next state elections, 5 state elections which are coming. So I think that will give us some indication whether this liquidity or this strength in the market is there to stay, or we can get some correction based on those results also.
It's going to be a busy day, lots to watch out for. First up, the correction in the IT stocks, whether or not that's likely to continue. Remember, it was a down day for most of the frontliners, and most of them cracked for 3 straight days in a row. Of course, in terms of earnings, you will have Wipro that will be putting out its numbers, as well as Ken India. Mid-cap earnings include Yes Bank, Rallis, as well as an ING Vesya. And what will be crucial to watch is the MCX board meet as well. Lots of developments on that crucial fiasco. And the finance minister will be meeting the heads of all the PSU banks to talk about recapitalization. So the calendar is full. What will you be watching out for, Nikunj?
The texture of the market, Brett Avan, because now the tail has really started wagging. The mid-cap end of the market is looking okay. You got the laggards which are now becoming leaders. In last 2 or 3 days, names like GP Associates, Adani, Unitech, DLF, the beta end of the market also has started appreciating. Whereas an outsider would say that if the beta part of the market and if laggards are moving up, that is indication of a very strong market breadth and broad participation. But my submission here is that if the weekend of the market starts participating, that to my mind is the first flush or the first signal that we are nearing a short-term market top. Also, IT, which is the performing sector, has just not contributed. IT is where the confidence of level is the highest. Flows currently are global in nature, and typically flows will like to move into a sector where there is a lot of visibility. So if the beaten end of the market continues to really lead the market rally, I think that's a dangerous sign. What you want to see is that classic leadership in performing sectors and maybe some stability in cyclicals.
Okay, so watching the texture of the market, that is what we'll be keeping an eye out on. But speaking of IT, let's start off with Wipro, which is due to put out its numbers. Profits are seen higher by close to 13% on a sequential basis. This is the consolidated numbers. The rupee depreciation will offset some of the impact of the wage price hike, and the guidance is seen at close to 1.5% to 3.5% on a sequential basis. Sandeep, let's talk about the chart pattern. If in fact they do deliver a good set of numbers, how do you expect Wipro to trend?
Well, Aman, I would first comment on the IT space. I won't term it weak for sure. But yes, a little bit of a corrective in some select stocks, maybe at TCS, maybe at HL Tech. But again, at lower levels, we will witness buying. So the pattern is not bearish per se. sideways to consolidative is what we can term as. But Wipro has a very strong resistance in the range of 515 to 518. So I would rather buy Wipro once it clears 520, then it can go to 540 or so. On the downside, I don't see 490, 495 being broken. So 495 on the downside and 520 is the range for Wipro.
Well, Reliance also is now looking decent, and there's obviously some give and take happening for Reliance Industries, even above 900 rupees per share. KK, as a house, you are bullish on Reliance. At the current juncture, how would you map the risk-reward ratio for Reliance Industries?
I mean, we are positive on the stock, and we believe that in the next fewer time frame, it should give decent returns. I mean, currently maybe the gas issues, etc., and also whatever investment they have made in the last few years, everything should start delivering returns in the next 2 years. So we believe that this is a stock which most of the, I mean, it should give decent returns in that next 12 to 24 months.
Neeraj, what would be your opinion on how you would expect Ken India's earnings to pan out?
I think we're expecting good set of numbers from Ken. I think the kind of crude movement also we've seen, it's been still very strong and above 105, 110 kind of levels. So I think I would again expect some improvement there in Ken's performance, and we are long-term bullish on Ken, and we're investing Ken in all dips. So even if there is a slight disappointment tomorrow, I don't really matter on a quarter-on-quarter basis, but I'm expecting a good set of numbers from Ken tomorrow.
Sandeep, what do you make of the action in the beta end of the market? And when I say beta, not PSU banks or infra names. We've got strong price action in the laggards, the Adani Ports, Unitech, DLF, JP Associates.
Nikunj, this is the way they move. When they move, they really move, and they move on both sides. And now, luckily, we are on the upside. None of the patterns I would talk of most of the stock patterns that you mentioned. None of them suggest weakness where they would just crash down from the current levels. Now, it would be a matter of an individual stock which goes up more than the other. I think DLF has still some more upside. Once above 172, it can go to 180 or so. So broadly, I would term it as a trading upside stocks with a 5 to 7% returns. Trading upside returns is what I would talk of. Maybe one of them, a couple of them may go beyond that as well.
Take a look at the Bank Nifty today. It was very jagged edges, and you did see a mild amount of recovery coming in. But, KK, what's your view on the banking space? Any names that you like?
We believe that ICICI Bank, Axis Bank and Federal Bank amongst the private banks should deliver decent returns in the times to come. These are the banks that we prefer amongst the public banks, amongst the private sector banks. And as far as public sector banks are concerned, I believe that State Bank of India and Bank of Baroda should be the ones which should be looked into.
Now let's find out what the dealing rooms are talking about in terms of individual stocks to be betting on. We've got Yatin standing by from our research team with the list. Yatin.
Well, Avan, a lot of dealers have been watching out for results, and Aurobindo Pharma as well as Voltas. These are the two stocks dealers are watching ahead of the quarterly results. Of course, Aurobindo Pharma is one stock you need to watch out for because the analyst community is looking at a 20% revenue growth for Q2. Of course, that would be aided because of the weakness in the rupee that we have seen, and being an export player in terms of domestic drug formulations, they would be looking at a margin expansion as well. So, on the basis of a strong revenue growth and margin expansion, dealers have been initiating positions here. A lot of HNI interest is also seen in Aurobindo Pharma, so do watch out for this stock. Apart from this, we have Voltas, which would be in focus because we have seen a lot of order pickup, as well as we have seen large capital goods companies like L&T not lowering their guidance for second half. So a lot of analysts believe that all of these companies, especially in the capital goods space, would be witnessing some kind of a recovery in second half, and Voltas is one stock which has been very attractive on the valuations, beaten down of course, but dealers are expecting a strong bounce back in Q2, so do watch out for this stock. Dealers are buying ahead of the results.
Right, Yatin, thanks a lot for that. Neeraj, what are your top ideas right now? At 6,200, what are you telling your clients to buy?
Actually, recently come out with a buy report on Zydus Wellness. We like this stock because I think this company is a market leader as far as sugar-free is concerned. and they have other products also which are doing pretty well. So this is one stock which we like, and we feel this can do about a 34 rupees EPS next year. So for a FMCG company which is trading at about 16-17 times, it's a good valuation to get into and get a decent return. And plus Crompton Greaves we've been watching for the last about 2-3 quarters. Last to last quarter we got a sense that it's bottoming out and the pain should be over after the restructuring they've done in the Europe division, Europe as such. And last quarter also the improvement was visible, though the international business didn't do that well. But there was a visibility that it's bottomed and it should improve from those levels. So based on that, we have a buy on Crompton Greaves also. I think from the current levels also it can give you 20-25%, about 20% return from these levels also.
KK, you're quite constructive on the mid-cap space. We've seen so much outperformance, but as of now, the market construct is that only large cap stocks are doing what they're doing on account of global liquidity. So the deep value argument for mid caps is valid, but do you think that idea will work out in the short term?
Absolutely, I agree with you as far as your thought process is concerned that mid caps may not deliver in the immediate. But the point is that you have to finally take a call from a 12 to 24 month perspective. And if you believe that things will improve in the second half of the year and going forward, then today is the time for you to buy into the large mid caps which probably are available at reasonable valuations. And again, mid caps are not you have to be very, very granular and bottoms up in mid cap stocks and buy into them accordingly. Value is a misnomer because what is important is management, business abilities, etc., business prospects, and the kind of enterprise value that many of these mid caps have. So you'll have to be very careful into what kind of mid caps you are choosing, but there is an appetite and there is a lot of interest in mid caps is what I'm saying.
Sandeep Agle, let's nail it down to your top ideas now.
Nikunj, I would go with a buy in a Aurobindo Pharma, stop loss of 210, target 231. The second call is a buy in a Maruti, which is given a good clear breakout. Stop loss of 1500, target of 1570.